Yes.
All right, perfect. Thank you, guys. All right, so let's get started, guys. Thank you so much for joining. This meeting is for our LJ Realty team. Today's May 8th, 2024. And let's get started with our interest rates. According to Freddie Mac, the interest rates for last week were averaging around 7.22. So this was on last week. And according to Mortgage News Daily, they came down to 7.19 as an average, right? What was that from our last week's meeting? Last week's meeting, they were around 7.5. So they came down to 7.1. That's a good sign. We were thinking, even when we had a meeting with our loan officer, we were projecting that it might go even a little bit higher and then it might start coming down. They're coming down now, so it's a good news for your real estate agents, realtors, yourself, and your clients. So maybe your current clients, when you're having that conversation, tell them, hey, the interest rates are changing on daily basis. Last week average was around 7.5. This week average is around 7.2. So it's coming down, right? How about your FHA? When you look at FHA 6.62, right? Why would someone not want to go with FHA? If someone says, hey, 7.19 is for your 30-year fixed conventional, and for FHA is 6.62, I would just want to go with FHA 6.62. But just know two things, right? We keep it very simple. With FHA, two things you have to remember. One is that if you put down 3.5% down payment, your mortgage insurance never goes away. So that mortgage insurance in your monthly payment is maybe $200, $300. That will stay there for life of it. So it's not gonna go away. So you wanna advise your client and say, hey, maybe you wanna go with FHA, but just know that that mortgage insurance is not gonna go away. On top of that, your hey Carlene, I want to just mute you. I think there was some echo there. Um, but hey, good morning, Sheldon. So for FHA, because of the interest rate, it seems as appealing, right? It is a good sign when your client doesn't not have great credit scores, so they don't have any other option. But if you have both option, conventional and FHA, just know that FHA's, interest rates are lower, but there's an upfront cost and the mortgage insurance does not go away. So those two things play in a big factor for your clients. Okay. Next, guys, in this situation, I'm showing you maybe your client tells you that, hey, I qualify for $560,000 or $648,000 or $722,000. One client, how come one client making $120,000 in this scenario here can get three different amounts? Right? Maybe he goes to one loan officer and he says, hey, 560, another loan officer 648, and the third one says 722. So we want you guys to understand that, hey, that pre-approval letter that you have is not concrete, right? It can change. And why would we get these prices? And we can get multiple prices, but I'm just giving you three different scenarios for 560, 648, and 722, right? Big differences. So look at the household income. They're making $120,000. Their down payment is $65,000, or just $65,000. Their monthly debt is $150, right? So these are their credit cards. We're using today's national averages of 7.19, but the property that they're looking for, that property tax is $8,000, right? So if it's $8,000 property taxes and the property insurance is 1,500, these numbers are not changing, right? The person, whatever income they're making, they cannot increase here or double it overnight, right? The down payment, maybe they can increase a little bit, but not much, right? Monthly debt is not going to change. But how come they're getting three different loan amounts or the sale price that they can purchase? That is because of their debt to income ratio, right? So we have to understand what is debt to income ratio. It is exactly how it sounds. Is what debt do you have, right? Including the mortgage that you're going to get versus what's your income look like, right? And you want your debt to be as low as possible so you can comfortably make your mortgage payments, right? So you can comfortably make your mortgage payments. So this same client making $120,000, if they're saying that, hey, they want to have a very comfortable mortgage, have no problem, they don't want to go through foreclosures or short sale or any of that, even if they have hardship or not, right? They want to have their DTI as low as possible. So they'll leave it at maybe 43% here. So if it's at 43%, what does their mortgage look like? $4,100, right? 4150, and the house price should be 560, so they can comfortably make those mortgage payment. On the other hand, if they're going with a conventional loan, we said 43%, but if they're going with conventional loan, they can go up to 49%. So maybe that loan officer says, "Hey, go ahead, find a house for with Sheldon for 560, or you can go up to 648." Who wouldn't want to go to 648? But are they comfortable making that payment? So the payment went from 4100 to 4700. Okay, if they're comfortable, they can, because of their income, they can go up to 49%. On the other hand, if they want go with FHA, FHA allows you to go up to 54%. So that family can go up to seven. They can buy a house up to $722,000. Would you recommend that to them? They can buy that, but should they buy that? Their ratio, debt to income ratio, is 54%. That means 54% of their income is going to go towards their mortgage, right? It's a huge amount. So you want to advise your client is like, hey, let's see what their pre-approval looks like, and do you know your debt to income ratio? So as realtors, if we have this an idea, hey, my pre-approval shows I can buy 648, but should I buy 648 or not? Okay. So those numbers are not concrete. The income can be same, but they can go to three different loan officers and can have three different pre-approvals depending on their debt to income ratio. Okay. So how about if your client tells you, "Hey, I make $80,000, guys. Do you think there might be an option?" Yes, there's an option. So you guys should know about Home Ready Loan Program. Right? It's a really good program, but you need to make lower, or your household income needs to be below $93,000. Right? Every area has a different area medium income. I'm talking about Queens here. And for Queens, if you're making less than $93,000 a year, then you can qualify for this Home Ready Loan Program. Okay, so what does that mean? So this Home Ready Loan Program, it's a conventional loan, right? It is a conventional loan, so you need your credit scores at least 620. So even though your income is 80,000, 70,000, 90,000, as long as it's below 93,000 and your credit scores are 620, we can qualify you for this loan. Okay? The good thing about this loan is a conventional loan, so you don't have to worry about refinance. Once you or your client gets into this loan, it's going to be a conventional. So as soon as you hit 20% equity, your mortgage insurance goes away. Okay? So your debt to income ratio, because we mentioned you earlier as well, your debt to income ratio for conventional, the maximum you can go is 49%. Okay? Your closing cost is going to be between 3 to 5%. And how about down payment? Most people think for conventional I need 20%, 15, 10. For Home Ready, it allows you to go as low as 3%. So it's even lower than your FHA loans, right? FHA loans allows you to go up to as low as 3.5. Your Home Ready allows you to go down as low as 3%. Okay. So some key points here: it is a conventional loan, allows you to put down 3%. Your income must be below 80%. So we did the calculation here already. We showed you is $93,000. As long as your client is making less than $93,000 and they have credit scores of 620, they would qualify, right? But the government wants your client to take a home ownership course. It's a very short course, tells them the responsibility that comes with the home ownership, right? It's a good thing. So even if they did not require it, we would tell them, hey, we highly recommend it. But since it's required, it's a win-win situation for your client, right? This is a conventional loan, so your client can have this as a primary or investment property. So don't be discouraged if your client tells you, hey, I make only $90,000. I went to a loan officer and they told me I don't qualify for much. Maybe they do. Tell them to come to LJ and maybe we can help them out. Okay? So as the program is called Home Ready, and another one is called Home Possible. One is by Freddie Mac, the other one is by Fannie Mae. Both of them are great programs, right? And we have done those, and we highly recommend that you bring in your client and see how much they qualify for. Okay. Okay, guys. Next, few things about what's going on in the news, and we're going to go through some stats. So the way the market is going, consumers feel stronger about selling their homes than buying. So that's a positive thing as well, right? Because we're waiting for more inventory. If there's no inventory, realtors, we don't have anything to sell. So if the homeowners are thinking this is a good time to sell. Let's take some action on it. So in today's meeting, we're going to go through what some actions you should be taking to get some listings, right? We want you to be listing agents. So there was a survey done by Fannie Mae that you guys can see here that 67% of the people who responded said it was a good time to sell a home because you are getting the right price, versus while 20% consider that as a good time to buy a home, right? Why 80% people are saying it's not a good time? Because of the interest rates, because of the mortgage, right? The mortgage payment is too high for them. How about the home prices? Your annual home prices gain reached 5.3% in March. So the prices are not coming down, guys, right? If your client's going to wait a few more months or a year, they're going to pay even higher prices. So this study was done. These stats came out yesterday. So you guys can see about there was a price increase about 5% according to CoreLogic. Okay. Here's another poll here. This is the same graph that we showed you earlier, right? This is the one that shows you is a good time to sell versus good time to buy. Okay. So 2020, what did we see? It was not a good time to sell because we were going through COVID. Nobody wants to sell their house. Whoever was selling, it was a great time to buy. Why? Because the mortgage payment was so small, right? The interest rates were so low. It was easy target. It was like, hey, I want to, if I can afford to buy a house, I'm going to buy a house. Okay. But now it's quite the opposite. So it's a good thing for the realtors. Why? We can take some action and be a listing agent. Okay. So home buyers lowering their expectations as well. So it's a good thing. You're going to see both from the buyer side and the seller side. So what buyers and sellers should do, right? For this is what the realtor.com survey found. Only 12% of the sellers now expect a bidding war. So every 100 people, 100 sellers, only 12 of them are saying that we're expecting a bidding war where you get an offer and then, maybe you want to wait a day, maybe 2 days or something, and then you will get a higher offer or not, right? There's less and less of that happening right now, right? So maybe you have an offer, maybe they'll think about it in 24 hours, 48 hours, and say, hey, we'll accept it, let's move on, okay? And just 15% of them are expecting more than, higher than asking price. So they're saying whatever price we're asking you, as get me close as that. They're never asking to go overboard. Okay. The key here is pricing your property correctly so you can sell it quickly. Okay. But just know that the home sellers, if they're putting a property on the market, they just want to get rid of it as soon as possible now because they know the situation. There's not as many buyers as there were during COVID time. Okay. And for the buyers, right, they should get a pre-approved for a mortgage as soon as possible. And whatever, let's just say they got pre-approval last week for 7.5%, and now we are 7.9, 7.19, right? So we came down a bit. So they would qualify for more. So maybe they got a pre-approval when there was interest rates were 8%. So there's a big difference. So have your client go back to the loan officer if necessary to find out if the pre-approval amount changed or not. Right? And how many times you have seen where your client tells you, hey, let's start with South Ocean Park. I'm looking for South Ocean Park. And then they say Richmond Hill. And then they go to Woodhaven. And then they're moving towards Brooklyn area. Or they're going from, Queens here. And they're heading towards Nassau. And they start at Elmont, Valley Stream, Franklin Square. And then all of a sudden they're around Hicksville. Right? Why is that? Because they can't find the right property. So they're expanding their search area. So expect that. So you don't tell them, hey, you told me you just want to be in this area. Tell them, hey, you're looking for 1 family, 3 bedrooms, 2 bathrooms, and this. Can we expand our area a little bit? We don't want to go too far. I know you work in this area here, but can we expand it a little bit so we can find a little bit more properties, right? So ask them exactly what they want. So this way you're not going to be wasting your time or theirs. Okay. Here's some more stats here. According to Res Media here, 20% of the respondents said it's a good time to buy. So we're showing you so many different surveys. Some of them said 12%. Some of them saying 20%. So just know that it's on the lower end. So expect that from your clients. Not everybody's going to be ready. You want to work with the people who are ready. They have already waited a long time, and now they want to be under contract, right? So now again, Rismedia's stats are very similar. 20% say it's a good time to buy. 67% of the time it's a good time to sell. Okay, while 32% say it's a bad time to sell. Okay, so different surveys that you see, you will see that, but majority of them, this is where we see, hey, more than 50%. Where do we see that? Good time to sell right now. Okay, 42% of the people who responded said that the prices will go up in the next 12 months. So you have to know that fact as well. If you're simply going to wait, you're going to pay the price. Okay. So how about buying a multi-family? So we have seen where maybe a client came to us as to get a pre-approved, and they say they think that they only qualify for a single family. They don't know that if they buy two family, we can use 75% of the rental income. So let's say you want to buy a house for yourself, you're going to be living on the first floor, and you want to rent out the second floor, right? If the second floor's rent is $2,000, then the bank will use 75% of that, which is $1,500 per month as your income. So you can qualify for a little bit bigger house and you can buy a two family. You can see the stat here, only 14% of the home buyers purchased a multi generating generational home. So we want you to think about buying a property that's going to be not just for one family. Try to buy two family so you can bring in some income, rental income coming in from the second family. Okay, second floor, we will use 75% of the income from that. Okay, some people will want to rent out basements. Realtors, it is illegal to rent them out. Do not get involved with it. If you do, you can have bigger issues. So something illegal, you want to stay out of it, right? If they want to rent it out on their own, do whatever, you do not want to be involved in that. Okay. Maybe some people will ask you, hey, what are some reasons to buy a home? Majority of them already do know that, right? But as as a realtor, you should know that number one is your equity. Even when we ask our loan officer, especially the new ones, define equity. What is equity, right? We hear that word a lot. What is equity? Equity is your profit. That's you're sitting on, and you're building over time. Every month you're building your profit in that property that you're living in. How are you doing that? One is that whatever the property value is, let's say it's $500,000 and your loan amount is $400,000. That means you're sitting on $100,000 profit. It's yours. The bank, when you sell that house, what the bank wants, what do you owe them? $400,000. What are you left with? $100,000. Where does that money go? It goes to your bank account. You could do whatever you want with this, right? That's your equity. That's your profit. So when you hear the word equity, think of, hey, how much equity do you have in a property? How much profit do you have after paying off everybody when you sell that house? Okay, there's some tax benefits, right, to that. When you buy a house, your CPA will say, hey, there's going to be tax benefits because you bought a house. Predictability, you know that, hey, this property value should go up and my mortgage payment is going to be stable as number 4. And number 5 is the savings. Who can actually save $100,000 here? Right? Very tough to do. So best thing to do is buy a house, keep paying off the mortgage, you're building equity and you're having some savings there. And whenever you want, you can take that money out through a HELOC loan, right? So you can take that money out without selling your house. But just know that you're building equity, Use that word when you're talking to your clients. Okay. So if your client is a first-time home buyer, first thing you want, they say, hey, I don't want to go to a loan officer, right? I don't want to go to a loan officer right now. They're going to do a hard credit pull. Stop them right there. Hey, you should go see a loan officer that's not going to do a hard pull. That's not going to damage your credit scores in any way or form, right? We do that here with soft pull. We can do a soft pull. It does not touch your credit scores, and we can see what's your credit report look like. If the client says, hey, I'm going to just use Credit Karma to check my credit scores, it's perfectly fine. They have an idea what their credit scores look like. We never want to discourage our clients. We want to be with them. They want to do their own research on Google, ChatGPT, let them do that. But you want to verify, you hold the license, you have experience, tell them I can guide you all the way to the closing. So you want to have them check their credit report. Number 2 is be realistic what they can afford. We gave you example. Maybe that client can buy a $700,000 house, but do we recommend it? No, right? You don't want your client to go through a foreclosure or short sale. So be realistic what they can afford, guys, right? And understand how the lenders will operate. If they go to a TD Bank or Chase Bank or any direct bank, they have their own guidelines. They come to us as brokers. We will have different guidelines. We're shopping around with different, lenders out there. So have your client understand the terms, have understand what's the difference between FHA, conventional, right? So this way you're educating them, right? This is going to be super important after July, especially in August and everything, when the clients are telling you, hey, you're telling your clients, hey, you need to sign this agreement with me. You have to come up with these terms. You have to be telling them about all these things so they can rely on you for all the way, right? They're not going to sign your contract or any agreement if they feel like, hey, you're not professional, you don't know what you're talking about. Okay, so have them check their report, be realistic about what they can afford, and have them go to different lenders and see what their options are. Any questions, concerns, anything on your mind, guys? Okay. Yes. So next, guys, we want to talk about homeowners insurance. Some of you guys already own homes, and you're getting a renewal policy for your homeowners, and the prices went up $400. Maybe the price went up $1,000. Some of them we have seen where the prices went up $1,500. That is saying that that company that you currently have don't want to do business in that area, right? They want to get out of that area. So how they want to do that? They want to reduce that business by increasing your premiums. On the other hand, there's some companies who are increasing their rates over throughout the United States. New York, California, and Florida are the three states that have the biggest losses for them. So those are the three states where they're seeing the premium go the highest. So average annual household, your annual cost for homeowners insurance in U.S. in the whole United States is about $2,500. Okay, so for New York, 2573 is your national for your statewide. Now for New York City. New York City, it's around for a two family around $3,000, and for a single family is going towards that what we see with even our brokers here around $1,900 for a single family. Okay, some of the other states, just to give you guys an idea, like Texas has $4,800 average. So just know that there's some, even California had a high one, Florida also as well. So different companies have different rates where they go up depending on how much losses they're getting in that particular area, right? So what does it involve? Number one is your location itself. If it's a riskier area, if such as floods or hurricanes, where the stats are there, hey, this area there's a lot of hurricanes, like you see, in California, or you see earthquakes in California. So the premium is going to be higher. Next is what's the condition for the property? Is it brand new? Does it need repairs? That will matter, right? The risk factors, if does it have a swimming pool? Does it have a trampoline? All those factors will increase as well. How old is the house, right? What is the age for the house? That will matter. The roof itself, right? Will there be a leak? Will your client do a claim if there's a roof leakage, right? The age will matter, and the vacancy as well. Are you going to live there? Is going to be a vacant property? Is going to be a second home? How many months are you going to live there? That would matter as well. Okay. And some of you guys have pit bulls, right? If you have aggressive dog, right, that's gonna have more liability on you, because maybe that dog can bite someone and someone can sue you for 40, 50, $100,000, right? So because you are higher risk, so they would want to find out what type of dog do you have, and depending on the type, your price can go up. Okay. How about if you're filing claims all the time? Hey, I have this water leakage, I have a basement leakage, and everything like that. That will matter as well. If you have excessive claim history, your prices will go up, or your premiums will go up. Okay. How about if you run your business from your house? Right. Some people do that. So if you're running any type of business, that will matter as well. And if your credit scores are low, that's going to matter as well. If your credit scores are low, you will have higher premiums. Okay. So maybe you want to read your own homeowner's policy, and you want to look for deck page, which is your declaration page. and you want to see your coverages A, B, C, D, E, F, right? A through F here, and I just want to give you a brief description of what does it cover. So number one, you see here coverage A here. This is your dwelling. This is the property itself. This is the building itself. Okay. If the property were to burn down, how much would it take to rebuild the property? So in this case here, they're covering up to $775,000, and this is for a single family. So it's covering more than enough for a single family here. Okay. Your coverage B is your other structure. This is going to be your garage. So usually it's 10% of your dwelling. So the dwelling was 775,000. Your coverage, your garage is going to be covered up to $77,000. Okay. Coverage C, this is your personal property. So if you were to take the property and you were to flip it and shake it, anything that falls, that's your personal property, right? So your TV, your furniture, your laptop, your anything that's movable, that's your personal property. So if in case of a fire and all those things gets damaged, you're covered up to, in this case, $387,000. Okay. And coverage D here, loss of use. This is if you cannot live in that property. Obviously, the property burned down already, and you have to go live somewhere else on rental income. Your policy will pay up to $232,000 for all those expenses for loss of use. Okay. And your coverage E, this is your personal liability. This is if someone slips and falls in front of your house because it was icy, or your dog bit them, or they fell on off the stairs going into the basement, any of that, anything on that nature, and they want to personally sue you. This is your coverage up to $500,000. Okay, $500,000 per occurrence. If there's medical bills, then it's coverage F. So A through E is very important, guys. Okay, so you want to compare that from one company to another and see what is the total premium. In this case here, it was $23.48. Okay, so you want to compare that with at least 2 or 3 different companies and see how much or which company you want to go with. Okay. All right, guys. So that is your homeowner's policy. Even clients that come to us on our LJ Insurance Agency, right? We tell them, hey, when we're shopping around with at least 3 to 4 different companies, sometimes more. But you can go ahead and shop on your own, and let's compare it. End of the day, we think for our client, hey, what is the coverage you're getting and what is the premium? And let's just compare those, right? If someone else beats us, on that, it's perfectly fine. Right? This way your client is winning, right? So this is how you're going to compare it. So if you own a home, you have a homeowner's policy, go review this and make sure you're covered enough there. Okay. All right, guys. Next, guys, I'm going to give you about 100 different ideas for social media, right? We're not going to go through all 100. I'm going to give you the bullet points, and I want you to start using them in your own way. So one is to showcase the property itself. So if you have a listing, or if you want to go to your open house, you can probably take some videos there and make a clip out of that. If you have a property to showcase where you can take before and after, if your seller is going to go ahead and renovate the property, you want to do virtual tours, it's perfectly fine, but you want to showcase the property itself. Then you guys are realtors, right? You guys already went through deals where you had issue with your client, so maybe you can learn from that. That's how we make, excuse me, guys. This is how we make our, the videos that I make on TikTok and everything like that, thinking of, hey, the buyer or the sellers and trying to give them tips, right? So this could be a listing presentation, buyer's presentation, your checklist for the homeowners, checklist for the seller, right, or the buyer, common asked questions, right? It doesn't have to be a long list. Majority of these clips can be a minute to 2 or 3 minutes long, right? So you want to see, when you actually review this in your own time, there's about a list of 100 things, and you want to see if you can actually go ahead and make a video out of that, right? It could be negotiation tips, right? Simply put, it's like, hey, if you see a price of $500,000, should you put in that price? Should you go over? Should you go under? What are some negotiation tips, right? So you want to tell them about that. Next, if you can get your client to write you a testimonial, right? Those goes a long way. Sometimes, especially the clients who are just closing, right? This is where you want to focus on, like, hey, I need a testimonial. It could be Google review or not, or make a video and just say how was your experience. Okay. Next is your market insight. This is how we do our hyper local market reports, right? I usually do them on monthly basis, picking out either Nassau or Queens and say, hey, this is what's happening in these areas. So it could be the market trends, it could be the insights or guides or advice, tips, right? What does a life look like in a realtor's day in a life? Maybe you're doing your showings and everything like that, right? Your home inspection. If you're doing a home inspection, you guys can make a small video out of that. So there's a lot of ideas how you're gonna be promoting yourself. If it's a behind the scenes, you can make video on those. If you're coming to the office, you want to make a video on here, it's perfectly fine. Okay. DIY, right? Do yourself improvements, home improvements, any of those things you see on TikTok and elsewhere where there's a huge following and people are just giving tips. Hey, these are some landscaping ideas. Here's some interior design tips for you guys, right? So you choose any of that. And if you want to work with other agents, if you want to work with myself here, even to be in your video and we can talk about different things, I'm open to that. Just tell me that, hey, you want to work here, you want to come and make a video, just ask common questions. We can do it together. Okay. How about seasonals, right? When we're going from spring to summer, maybe you want to make a video on that. How about going from summer to fall, right? Here, what some tips for the homeowners? How are you going to keep your house safe, right? You can do those type of videos. All of them are helpful. And if you want to get technical and be advanced topics, right? Mortgage questions. Maybe you want to have myself here or any of the other loan officers talk about mortgages. We can do that. Maybe there might be some title questions, insurance questions. We just went through a whole insurance policy with you guys, right? These are the things. This is where you're going to be bringing value to your client. It's just not about showing and selling the property, but it's showing them that you know the whole picture, right? You get the whole idea of being a realtor. Okay. And your personal branding, guys, when you're promoting yourself, right? Make sure in your bio it does mention that you're a real estate agent. You might have other things in there. That's great. But do mention first that, hey, I'm a real estate agent ready to help, right? And make sure that you're promoting yourself online much as possible, guys, because more people are watching or spending more time on social media compared to anything else. When was the last time, just ask yourself, Carvin or Lillian or Sclaren, right? When was the last time we actually picked up a newspaper? Right? It's been a while, right? But when was the last time we went on social media? Probably right before this meeting, right? So we can actually, if our eyeballs are there, this is where our clients are there as well. So I'm not telling you guys to spend money and promote yourself through that paid advertisement. You can do it just organically, just bring in some value with these tips. And we have 70 agents, but not one of them is a luxury real estate agent right now, where we're only focusing on luxury. And our goal is to have at least one or two agents that's going to be focused on luxury properties, right? So properties that's exceeding over $1 million, a single family. It could be in the city, it could be in Long Island, it could be in Queens, but just focusing on luxury. How are you going to get into luxury? When you start saying no to the smaller deals. Hey, I'm only going to work with $1 million, right? Or more clients. But how are you going to do that if you don't have any experience on the lower one? It's going to be a ladder, but I want you to make a goal. Hey, I want to be in luxury side. I want to have more commission, but I need to focus on luxury part as well. Okay. All right, guys. And the last one here is your real estate events, right? And your news. So interest rates are changing on regular basis. We have different guidelines that's coming in for our real estate agents for the commission. There's so much things that's going on for the real estate side on regular basis. Even if you just Google it, real estate news, and you will see maybe 50 different headlines there. I want you to start reading those so this way you can increase your knowledge in real estate. Okay. And on Twitter, if you can follow NAR, right? This is our National Association of Realtors, right? NAR underscore research, and they will give you a lot of different stats. So please follow them so this way you can bring some value to your client. Okay. So there, that list has about 100 different ideas. The only question that we have is that will you use at least one of them? Okay. If you can just use one of them and make a video, that'll be great. If you need any help, let me know so we can get started with that. Okay. So all the survey that we saw is basically saying that this is a good time to sell. So if it's a good time to sell, we should be contacting the homeowners. We should be knocking on the doors for the homeowners. Hey, this is a good time to sell. Look at the survey here, 67%, 70%, 80%. Different survey shows different amount. Definitely on the higher end, this is a good time to sell, right? So if you want to be on that note, you want to be focusing being a listing agent. So how are you going to be a listing agent? If you don't know the market, you're not going to be a listing agent, right? So you have to know your real estate market. So don't say that, hey, I specialize in New York. Nobody specializes in New York, right? New York has how many people? Over 10 million, right? Just in New York City here, 8 to 10 million people. Right? Do you really think that's just a city? Can we really conquer New York State as an individual? Right? It's going to be really tough. You can't say, hey, I specialize in Hicksville and I specialize in South Olsen Park. It's going to be really tough for you to do that. Right? So really pick an area. It's like, hey, this is what I really want to get to know this area. And you should start off with wherever you live. If you live in Queens Village, you should be doing that. If you're in Jamaica, Queens, you should be doing that. Whatever area you live in, right? Start writing down some notes there, like, hey, which area that I'm gonna focus on, right? What are some stats for that area? Right, for a single family, if the lot size is 40 by 100, and if it's 3 bedrooms, 2 bathrooms, what is gonna be the price, right? If the property needs a lot of work, what should be the price? And if it's a brand new, fully renovated property, what should be the price? Right? In that particular area, like South Olsen Park, how many homes have was sold in this area in the last 30 days? Right? And pay attention. How long does it sell to? How long does it take to sell that property? So you can see when was it on the market. Everything, all this data is on Stratus here. So if you want to be on the listing side, you have to know these stats because the owner is going to be asking you for this. If the owner knows more than you, he's not going to sign any agreement with you. If he knows that up the block on 127th Street, there was another property that was sold for 750 and you're telling him that no, this property is worth 700, we will have a problem. So do your research before you go see the seller. Okay, how are you going to do this? By knowing the market. So writing down different stats. There's no way you're going to memorize all this. So one sheet should be just for South Olsen Park. Another one should be just for Elmont. Another one should be just for whatever area that you live in and you want to really focus in. We're not just saying that to pick only one area. You can pick multiple that's going to be close by, but don't have it where you're saying in this area and the other one is 50 miles away. Okay. So how are you going to do your research, right? It's easy to say, but it's harder to do. So number one is your RPR. This is just punching in the address in your RPR report and finding out the stats. You're finding out when was this property sold, right? If it was sold last year for $600,000 and this guy is asking for $1 million, I have a lot of questions for this seller. Hey, how come this property is going up in $400,000 value over 1 year? What did you do so special to this? Right? When you start asking those type of questions to the seller knows that, hey, you know what you're talking about this property or this market, right? So that's your RPR. Geodata, you're finding out the stats for geodata, right? I always take the RPR, used to RPR and geodata reports when I'm going to see the seller. Where I'm telling the seller, hey, here's your RPR report shows that, this is the value for this property. This is what geodata shows. This is the value for the property. Now, since the sellers, maybe he's checking on Zillow, I want you to go to Zillow as well. So print out at least 3 to 5 different properties that was sold in that area for that similar property that was sold in that area and see the price points. If all 5 of them were sold around $700,000 and he's asking for $900 or $1 million, then again, we have questions. Okay. Comps are must for every seller, right? Every seller needs to see the comps, right? We're comparing this property with others. Nobody, maybe I was speaking with one new agent, and they said, hey, I have an idea what a one family, three bedrooms, two bathrooms, in this area, what should be priced at. That's great. That means you have an idea in your head. But when the seller, you're talking to the seller, you need to have it on paper. So even if you take what you have a presentation and you have comps, maybe 20 pages, it's perfectly fine. The more, the better. So this way, the seller knows that you did your research. Okay. And how are you going to market that, right? The seller will ask you, hey, I know I'm going to sign this agreement. You're going to put it on MLS. Will it go on online on Zillow? The answer should be yes. Will it go on realtor.com and other websites? The answer should be yes. Tell them, hey, I'm going to be promoting it more from my side as well. So that's one, that's given, you understand that. But I'm going to be spending some money on this property, and I'm going to be sending out flyers. I'll probably do direct mail. I'll do social media. The software that we use is KV Core, and there's a boost feature in there where I'll be spending some money on that and trying to get clients there, right? I want to have open houses so we can have more people coming in, and we will send out a newsletter as a company so to let them our clients know that, hey, there's a new property available on the market. Okay. So what are the sellers concerned about, right? Especially if it's your new agent, the concern is like, hey, can you actually sell this property? I don't want to give you a listing for 6 months or a year and just wait, and then you tell me that, hey, I don't have any buyers. That's the worst thing you can do, right? On the other hand, there might be some roadblocks by the seller. We have seen that over and over, and it really, penalizes them when we don't see any offers. So the two roadblocks that we see is when the seller says, hey, I don't want you to host any open houses, or I don't want to have a for sale sign, right? So your objection to that should be like, hey, I want to have the maximum number of eyeballs on this property. And the reason is that we want to get the most amount of offers so you can pick the best one. I don't want to just give you 3 offers where I can get 7 offers by doing these things, right? So open house is a must, right? There's so many buyers. Tell them there's so many buyers who are scared of going to a loan officer and getting pre-approved right now because the interest rates are high, right? But they know that they can afford this property. Maybe they got a pre-approval 6 months ago. Let them see it at the open house. There's no harm, right? You want to sell this property, you want to move on to the next one, right? Why would you care if someone comes to this property or not? Okay. Second is for sale. I don't want my neighbor to know. Don't you think your neighbor would know when they see it online on Zillow? So put up a for sale sign. Let us put up a for sale sign so we can have people who are not actively looking online and they're just driving by. If they're driving by, passing by, I want to have a for sale sign so I can get calls from there. So Janet, you just put up a for rent sign at the business, so you should be getting phone calls from there. So anytime you have for rent, for sale, a for sale sign is a must. Okay. Some people do say that, hey, I've been living here for 30 years. I just don't want to put up a for sale sign, right? It's hard to argue, but your initial approach should be, hey, these are the positive things. We want to have maximum number of eyeballs at this property, which will equal to more offers. Okay. And this is what you will get the listing. If you don't take this form, which is your seller's breakdown, the seller will most likely not sign any agreement with you. If you take this, especially if you take 2 or 3 different versions of this, there's a good chance that they will pick one of them. So my approach used to be, hey, I'm going to take 3 forms of this, maybe at 3 different price points. So maybe I'll give them a price point at 700, 725, and 750, right? By doing my research. One on the lower end, one on the higher end, one right in the middle, right? So what does this seller's breakdown is? It's very simple and it's very straightforward. It's telling you guys, or telling the seller, hey, you will not be surprised at the closing table. I'm being very transparent with you today, so this way there's no surprises. And when we at the closing table, you can know that, hey, whatever you told me initially, this is what I'm taking home right now at the closing table. So this form is very simple. You put in the list price. Let's say I want to put in it for 700,000. I'm asking them, hey, what is your current loan balance? Let's say they say it's 350. They say the next thing is your transfer tax. Tell them, hey, the transfer tax must be paid by the seller, right? It's negotiable, but no buyer in this market will want to pay the transfer tax. They already have enough things to worry about: their down payment, closing cost, now their buyer's agency. And if you say transfer tax needs to be paid by the buyer, we will have a major issues where the buyer would not want to move forward. So, Mr. Seller, I don't want you to be surprised that you have to pay $12,000 at the closing table. So, since this property is in South Hilton Park, which is in New York City, you would have to pay 1.825%, which is going to be $12,000 for this property. Okay. For our fees here, for listing agent, I'll charge you 1.5%. Again, this is all negotiable. And the listing agent gets 1.5, and the buyer's agent, your selling agent, gets 1%. Okay. Again, all this is negotiable. I like to put the percentage, and I would like to put it in parentheses your amount. Okay. So they have an idea of both of them. And then for the attorney fees, tell them typically is between $1,300 to $2,000, but we typically see it around $1,500. So I'll put $1,500 as your attorney fees. So I'm subtracting your current loan balance, transfer tax, and our fees from this list price. So I'm left with $318,000. So if the title comes in clean, you don't owe anybody else any money, you should not be surprised that if we do go under contract at $700,000, you should be taking home around $318,000 at the closing table. Okay. So one, you're telling him what, you did your research for the market. You know what the properties were sold in that area. Next, you told him or her how you're going to promote that property, right? By doing it online, direct mail, promoting it, paid advertisement, non-paid advertisement, and then you're giving them a breakdown of what they're going to take home at the closing table. So virtually or visually, you're taking them there, hey, to the closing table just by talking to them for next 10, 15 minutes there. And most of them will just go and say, hey, you gave me three different, 700, 725, 750. Let's just go with 725. Okay. And list it at 725. And that should be your approach when you're talking to the sellers. Questions, concerns, anything on your mind, guys? Okay. And if you guys want, especially if you're a buyer's agent, have not got any, seller's lead, or, this is your first appointment and you want to take me there with you guys, I'll be more than happy to go there. Okay. We want you to get the listing. So have your client say, hey, my broker will be there with me at the, when we come see you. And if you have any questions, I still want you to present and I can be the backup. Okay. But we just want you to be focusing on the list, being a listing agent, because again, the surveys are showing that this is a good time to sell. So let's just focus on that. Okay. We're going to close it off, guys, in 5 minutes or so with what the successful agents are doing. What are they doing that's going to be better than you, right? So even if you're closing whatever deals, there's always someone doing better than you, right? That's just the nature. Right, that's the nature of business here. One is having goals. Do you know how many deals that you want to close this year or this month? Did it bother you that whatever number that you closed last year, did that bother you, or were you satisfied? If you were satisfied, then there's no growth. There's no way you're going to grow from there because you're satisfied, right? You're making X amount of money at your other job. There's no issues. And then there's no hard feelings either way. But this is for people who are hungry. They're saying, hey, we need funds in our bank account. I need to make a living off my real estate, off my license. You need to set some goals. I don't care what the number is, but you need to set that goal. Okay. Do you know how many clients you have? You need to have your client count. As real estate agents, we do not need hundreds and hundreds of clients. If you can close 5 to 10 deals, you're making a good living in real estate. Is it hard to do 5 to 10 deals a year? Absolutely. It is hard. But you need to know your client count, and you need to know at least 5 people names in your head. It could be just nicknames. Hey, I'm working with Mr. Singh. I'm working with Mr. Khan. I'm working with Joseph. I'm working with Smith. Whatever the names is, like, hey, I'm working with these people, right? I'm showing them they're a serious client and I want to be under contract with them. And it will bother me that they're not going under contract right now because they have pre-approved. I already started showing them, and I just want to make sure that we can take them to contract. Okay. Other successful agents, they're following up with their client. They're not simply adding their client and setting up alerts and relying on KV Core to send them emails. They're actually texting them. They're staying in touch with their client. Some of these guys, they really know their family members and all that. That's fine, right? You're really taking it to a level 2 there, right? That's even better because you're really building relationship. But just knowing their names and saying, hey, I need to show Smith this weekend, that will go a long way. Okay. So know your top 5 clients and make sure that you show them this weekend. And they have nonstop showing. The top agents from our agency and others, they have a schedule where they say, hey, I want to make sure that I'm showing, because that's my job. If I'm showing, everything else will come in order, right? If I'm showing, the client will say, hey, I like this property. Janet, let's make an offer, right? On the other hand, if you're not showing, then we will have a problem because there's nothing, we can't move forward from there because maybe you show them 1 property, 2 property. It has to be more. It has to be more than that. Okay. You want to text your client from KV Core. Some of you guys are texting directly. It's perfectly fine. Some of you guys setting up WhatsApp groups. It's perfectly fine. It does not matter how you're communicating with your clients. Just communicate. Just see whatever program you feel is comfortable for me to go ahead and communicate with my client. Let's get the job done. Let's send them properties. Let's hear that words. Hey, show me this property. Once you show them, hey, say, let's put in an offer. Once we're putting in an offer and the offer gets accepted, everybody else is going to be taking care of it. Their loan officer, their attorneys and everything. You are the one who's really taking them to that part. Okay. So in the morning, especially depending on your schedule, because you guys are independent contractors, some of you guys maybe you have 9 to 5 and you don't have this time. Maybe you can do this at 7 p.m. Doesn't matter when you guys are doing this. Make sure that you check these 5 different apps on daily basis, right? Number 1 is your KV Core. This is where you should spend at least 20 minutes. If you're spending 20 minutes on this, trust me, you will go under contract. Right, 20 minutes a day just on KV Core, because the KV Core is doing the heavy lifting for you, finding all the new properties for that client, emailing them. You're simply going to go ahead and text them. If you need any help following up with your clients using KV Core, please come to the office. Let's spend 15-20 minutes and make sure you get that right. Okay. Next is your transaction desk. You just want to make sure, hey, I send out this offer letter. Did that person sign the contract, or did they send out that sign that offer sheet or my agency disclosures or not? You're going to be doing that on your transaction desk. I want to make sure that I want to see our office listings here. I want to see who's under contract or not. MLS status. I want to see, anything has to do with MLS. I want to have MLS status open. I want to check my emails. Clean up your email. If your email Outlook has thousands of them, clean that up. Right? How are you going to know if the important email came through or not? Right? 80 to 90% of it is junk. We need to find out the other 10%. And Microsoft Teams, guys, we're very useful. It's very useful. We're having our meetings there on that as well. But different channels that we're creating, everybody finds it really useful. Sorry, Sheldon, I did not see your message earlier, but that program is called Home Ready, and Home Possible. So there's 2 programs called Home Ready or Home Possible. Okay, so as long as they're making less than $93,000, they would qualify. But guys, this should be your setup: your KV Core, transaction desk, your MLS, Outlook, and your Microsoft Teams. These are the programs that you should be using on daily basis. Okay. All right, guys, we're going to go through 2 terms that you should learn, right? If you hear the word addendum, that means is it agreement or is a list added to the contract? Okay, you're welcome. So addendum is an agreement or a list that's added to the contract or any other document. Versus a rider. We also see a rider as well. And some people use them, changeably. That's perfectly fine. But just know that majority of the attorneys will say, hey, we'll write up a contract and we'll have a rider with it. So that is another document that will add or modify any condition that you want. So what we basically see, example of a rider is home inspection. So you did a home inspection and the home inspection has like 12 different things that needs to be fixed, and the seller says, hey, I'm going to fix these 2 or 3 things. So that will go as a rider. So just remember those things. Contract, you want to add a few things to it. We can add a rider to that contract. Okay. All right, guys, we have 2 new listings here. One is for rental by Sheetal here in New Rochelle. He basically has 2 floors. Both of them are available. He put up one on the market already. So if you have someone looking for a rental, reach out to Sheetal. And we have Janet, who put up a business for sale for $200,000 in Queens Village. So if you have a client that's interested, please reach out to Janet. Okay. All right, guys, we are running out of time. I have more slides here, but any questions, concerns before we get going? All right, guys, I do want to thank you guys for joining, and I will see you guys next time. Thank you, guys. Take care.